The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. Tommy O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us out here. And we got our man, Mr. Kevin Hinks from TD Ameritrade Thinkorswim. Market-wise out here, this is what we have. On the open, you got the Dow down 36, Nasdaq's down 4, S&Ps are off 7. We have the gold contract up $2.10, silver's up 12 cents. Bonds, the 10 years up 2 ticks, 30 is down 14. Good old King dollar's up 562 ticks. And Kevin Hinks, what's going on?
Good morning, Tom and Tommy. Happy New Year, everybody.
Happy New Year, Happy New Year. And folks, Kevin, each and every trading day now, TD Ameritrade, Thinkorswim, Kevin, Scott, Cindy, they have a great program, 12 to 1 Eastern Standard Time, swim lessons. And if you haven't listened, remember something. If you're in your car on the West Coast right now going to work, because it's 7 o'clock in the morning there, you can get all the programming at TFNN right on your cell phone. TFNN.mobi comes right through like nothing. If you're in your car, use that. If you're at home, you can just go to TFNN.com, hit Tiger TV. You're going to get to see the charts as well as the audio. So, hey, we had a heck of a start of the year, huh?
Unbelievable. Buckle up is what so far the theme for 2016 is buckle up.
Buckle up, baby.
That's for sure.
You know what was intriguing yesterday is that the VIX went up a bit, but it didn't go up as much as I would expect it to go up on a day that the Dow is down over $400 intraday.
Yeah.
Yeah, it hit a high of about 23.36 yesterday, and then backed off pretty substantially when, what Scott and I talked about yesterday, when our show starts, the market's down almost 400.
Yes.
Right? What do we talk about? Well, we talk about the main thing is don't lose focus and keep trading.
Yes.
Stay in the market, stay engaged. Think about it.
Right.
What do you do on a big down day like yesterday? There was great moves. We had a 150-point Dow rally from midday till the end of the day. Apple rallied over $3.30 from its lows.
Right.
So there was some money to be made actually being long on a big down day.
Right. Now, there's no doubt. And what Kevin's saying, folks, this is important to wrap your head around. And depending where you are in the cycle of, being in the markets play, when you have large moves like that, the opportunities for bulls or bears are much larger because you can almost, not that you can make mistakes, but you really can because the spread is that big. You just have to not be greedy, right?
Sure.
Right. Traders think about choices, right? And if I get 500 choices in a day, I'm probably going to do a better job than if I get 2 or 3 choices in a day to make a trade.
Huge.
Right?
Yeah.
Yeah, I mean, because you want a batting average.
Right.
And so the more choices you get to make good decisions, the better you are. And yesterday, when it's busy like that, you got a lot of choices.
You do. And what happens, folks, is that some of these moves take place in the course of 15, 20 minutes. I mean,
So if you look at where the markets were Sunday night at 8 o'clock,
yes,
which was like their high, basically. They popped like a tiny bit. So if you look where they were then, and I'm talking about the Dow in particular, but you go from that to the low yesterday, which was at about 11 o'clock in the morning.
Yeah.
And then you take it, so that was like 550 points almost, going from the high all the way to the low, because it was down 450 at one point.
Sunday night, what Tommy's saying, Sunday night when the futures opened, folks, they were opened up.
Right.
Yeah.
So it was a little bit more than 450, that move in itself. And then you go, the pop that it had, Kevin said, that was like at least 150.
Oh, it was. It was 150
if not
points.
Even more.
Yeah.
And then it's pulled back all the way overnight to this morning back down. You add up all those moves, it's almost 1,000 points in the Dow, just in 36 hours. And it's only 3 moves. That's not being like, I got the buy, I got the sell, I got the buy, I got the sell.
Right.
1,000 points in 3 moves in 36 hours to start the year, right?
Yeah, that's some serious ebb and flow that traders can take advantage of.
And that is where you look at, that type of stuff where if you're quick and you keep your stops right, and it's almost impossible to get every single point of that. But guess what? You don't need to make 1,000 points in 36 hours.
You
So
don't.
That's
you don't, man.
Yeah.
Trying to be right every time
right. It's just not going to happen.
Guarantee that you don't make enough trades.
And you know what's tough too? It's the mentality of that, and just being for that same deal, be prepared to lose. And that's what's tough about the mentality of things, and that's just a straight mental battle that everyone deals with.
There is, and you know what's so cool, folks, and Kevin, I know you know this, and Tommy knows this. This is my perspective, okay? But what I've found is this: on large days like that, right? I'll take losses like in 2 seconds. Like they're not even thinking about it because you know that the bread's there. Yes. It's just a matter. Okay, hold it. It's not going to bounce. Okay, I go short again. Okay, it's going to bounce. I'm gonna go long. And
I think that just goes to sticking with your plan.
Yeah.
Because you're getting out of it when it's going against you. You know, and you're not saying, "Oh, look at this is going so quick. I'm just going to wait." No. That's not your plan.
Right.
So stay with your plan.
Right.
And that's
Right.
Right. The best trait of a good trader is a short memory. Just like a closer in baseball, right? Don't worry about what happened on the last one. Worry about the next one. The most important trade of your day is the next one, not the last one.
It really is. How you deal with those moments of whether it's adversity, and they range from small adversity to large adversity.
Right.
But, everybody deals with them in so many different facets of your life, too. And this is just, money. Money is an emotional factor. And so getting a hold of that is important.
It is.
It is.
And, some days are better than others. Yeah. That's the other side of it. Do you know what I mean?
There's going to be some serious ebb and flow, like we talk about. When you have 1,000-point Dow swings, of course, there's going to be some serious swings. Right?
No doubt.
Some days you're the hammer, some days you're the nail.
You got it.
And listen, folks. Okay, so what's so cool about swim lessons is is that if you trade options, you absolutely have to listen to it. Okay, because the Thinkorswim platform is amazing. As Kevin says, I was just going to say that Analyze tab.
I was watching it yesterday.
Totally, man. I mean, that is king of the hill, man.
Yeah.
Well, Kevin, thank you so much, man. We look forward to the show tomorrow morning. I mean, today at noon, and as well as talking to you tomorrow morning, man.
Can't wait, guys. Have a great day.
Have a great one, man. Have a safe one. You stay right there, folks. Tommy and I are coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us out here. So we had a heck of a market day yesterday, didn't we?
Man.
What a way to start the day.
I was texting my buddies, and I said, Dow's opening down 350. Happy New Year, everybody. You know, I was like, what is
Oh, my God.
Yeah. So I bet a lot of people were saying that yesterday.
Oh, intense, man.
Hey, so real quick, I was just talking to you over the break, but we got to bring it up because it's on my head. What was I just telling you about?
The Making of a Murderer.
Making of a Murderer. I don't know if anybody's watched it.
On Netflix,
on
right?
Netflix. So Netflix, we're always talking about Netflix, right?
Yeah.
They're with Amazon in terms of FANG stocks plowing.
Huge.
And, man, they have some momentum coming into 2016. So this Making a Murderer series, 10-part documentary on a guy facing murder charges for, you know, and I don't want to give out too much, but I know there's a lot of people who have seen it. And, you know, one thing that I'll say is you always want to be aware of your rights. And you've taught me that very early. And you can see how in situations when people aren't aware of their rights or they're just don't have the right upbringing, don't have the right intelligence, don't have the right money, that a lot of bad things can go wrong. And if you have Netflix out there, I would encourage you to check out Making a Murderer. It was just released, I think, December 28th, so it's really something.
It's brand new.
10-part series.
Wow.
And it is mind-blowing. I was just telling you, you got to check it out. And I'm only 5 episodes in, so I don't even know. No, I'm 6 in, 6 of the 10. But it's incredible. They do a documentary about this guy, and you just look at, and it doesn't talk about cops in general. This is one small town and what can happen in one instance. But man, this one instance blows my mind. So I would encourage anybody to take a peek if you got that Netflix. And you know, talking about, so I heard, just jumping all around, John Logan was talking about Netflix this morning. I don't even think talking about this at all. And just talking about how cheap they are and how he has friends that they don't even watch it, but who's going to take the time to cancel a charge that's only $8 or $9 a month?
No,
I know, and I'm sitting here telling you this thing is amazing, $8 or $9 a month. I mean, it really is amazing what they've done with programming. And that's original content from Netflix, which is, you know, when you talk original, that's a big difference.
And it's huge. And the right issue that Tommy just brought up, folks, this is absolutely crucial to really wrap your head around, okay? What I think each generation has lost is that the right issue is there so everyone can be protected, and you're not even just because you don't have to talk to anyone, and that is lost in the conversation.
I think what you're trying to say is exercising those rights is not a bad thing, and sometimes people view that as, well, why won't you just let
which is crazy
cops talk to you or do anything? And it's like there's nothing associated with being guilty with exercising your rights, and in so many cases you just see that line distorted heavily. And in this case, there were kids that were 16 in this that got questioned without lawyers. There were kids that were 16 that had already been charged, that their lawyer, who was a horrible lawyer in my opinion, then allows this 16-year-old to get questioned without even him present. I mean, just horrible ways that the system allowed this to happen. So if you're out there, check it out, because it is awesome. I was up late last night and I finally had to turn it off because I couldn't even fall asleep.
So that's good.
You know how Netflix goes too. It just rolls.
I love
you don't even have to press the play button. One episode to the next, and that is really but man, whew.
That's a beautiful thing.
And just and so it's more pertinent to what we talk about too, because just from the stock perspective, the momentum they have right now, and you said you hadn't heard of it. We have guys saying in the den they've heard of it. All my friends have heard about it. On social media, you already have petitions calling for pardons. You have all this stuff. I mean, that's just amazing publicity, number one, where they really went at a great avenue to create their own publicity. I mean, they're not even putting it behind it, but it is amazing.
Huge.
Yeah.
You know, now if we look at the markets, folks, okay, I want to show you something that happened out here. If we take a look at the SPY, and this happened in all the markets, and this is where the characteristic of volume gets really intriguing. And what it is this, okay? So we knew that when we came down on December 18th, the volume was monster volume. That was option expiration. It was triple witching, okay? So what you had out here yesterday is that you had a huge expansion of volume, yet it was lighter than the 18th. The 18th we had 250 million. Yesterday, it came down at 222.
Yeah, which is remarkable.
Yeah, it is. It is. So what happens is that's where the rejection of lower price comes. And I want to thank one of the listeners, because one of the listeners really gave me the heads up on this. They sent me an email, because I was saying yesterday, hey, this thing broke with volume.
Okay.
Well, it didn't break with volume. That's the bottom line.
Details matter. There you go.
There's no doubt. And, you know, it broke with lighter volume. And you know what? It rejected it. And the cool thing here, so now what happens is this, is that now your benchmark is the 222. And if you go look at, so the 18th, and then what I do is this, when you look at the indice, and when you see the indice, it's going to be pretty wild because it recharges itself. You'll see the 18th in the NYSE, we did 2.5 billion shares. Yesterday, we only did 1.1.
Yeah.
So in order to basically get to lower price, you have to get over the highs again, which we just did this morning.
Okay.
So it's going to be wild watching this shake out. And that's in all the indices. That is also in the ETF structures.
Yeah.
You know, if we go to Asia, so what happened in Asia, it was intriguing watching Shanghai trade last night. So I haven't been able to find it in the written communication yet, but on Bloomberg this morning, they were saying that we were talking about the January 9th time frame.
Yes.
They said on Bloomberg this morning that now they've extended that, and I haven't been able to find it. With the extension I'm talking about, folks, is that January 9th, large owners of equities are supposed to be able to sell. Bloomberg this morning, they said that now that's got extended indefinitely. That's what they said, actually. Exactly. Now, I haven't been able to. I was hunting it all morning.
I believe it. That makes such perfect sense, because we were talking about yesterday. What's going to happen? They ain't going to let that happen, right?
Exactly.
Yeah.
Now, with that said, it still didn't matter last night that market couldn't hold.
Was it pretty much flat, though?
Well, it was. It got to 33.28 and then closed at 32.87. So, you know, it didn't move around much. But the amount of energy that it took to get down 7% the prior night, that would make sense.
Of course.
You know what I mean?
Yeah. Although, you say that, and then the next day, I mean, there's no reason why it couldn't have been down another 7%.
Yeah, there isn't.
But I agree. It's a huge move. But the only reason I say that is because it's a huge move, but it wasn't just, the market didn't say, okay, we're going to be down 7%. The market said we're going to be down at least 7%. The market stopped trading. So that's why, you know, it could have been much worse if that circuit breaker really prevented an acceleration. And it looks like maybe that just needed a moment of pause and maybe a moment of China.
And as Dave's putting in the den, that the China, you know, was basically inside the market buying, and it had in the news that they were in the currency market also.
I bet they were everywhere.
Which totally makes sense, you know. China said to intervene in stocks after 500 billion. Imagine a 590 billion sell-off. Oh my God, that's pretty intense.
Yeah, state-controlled funds bought equities and securities. Yeah.
The state's going to be stuck with all the...
Yep.
You know,
securities regulators signaled a selling ban on major investors will remain beyond this week's expiration date, according to people familiar. So they've just signaled it. What does that mean, right?
Yeah.
That means people in the know have said, hey, no way that this is happening come January 9th.
Right.
Just so, yeah.
Right.
Yeah.
Pretty wild, man.
It is.
And, you know, if we go over to... let me just...
We can close that. Why don't you just close that?
Okay.
There you go. Perfect.
So when we come into our markets, let's go into those. Well, let's see what's moving inside the.
Come on, the Dow's not even up and down 100. That doesn't even. Right?
Yeah, totally. So inside the NDX, this is what you have. The leader is Micron Tech. That's up 3%, 44 cents.
I'm talking about Netflix. Netflix is down 3% today. What's going on?
Yeah, it's down 378. At 106.29. You stay right there, folks. Tommy and I are coming right back. Dow's down 52, Nasdaq's up 5, S&P's are down 7.5. We're going to be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of the banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is off 61. You get the NASDAQ off 8.5. S&Ps are down 9.5. And you know what? When we talked with Kevin Hinks, there was no fear yesterday.
Yeah,
it was. You know, the VIX went up a bit, folks. Okay, but when we take a look at the tick index, what you're going to see, and this is always a mind blow when this happens. So when you start, well, you wouldn't expect to make a bottom in one day anyway after a day like yesterday. But when you go over and take a look at the tick index, what you're going to see is this: is that we actually, instead of having a downtick, when the market rallied that 150 points, you had an uptick of 1,452.
Okay.
So what that means is this, is that simultaneously, and that was at that 340, I believe it was 340.
It probably was, because it was in the last 30 minutes of the day that it was spiking.
Yeah, there
hard.
it is, 340.
Yeah.
So what that means is this, though, is that the correlation of buying versus selling, the buy-in was intense beyond belief.
That's just a net number, right?
It's a net number.
Net
in
positive.
The end, in this case, net
positive.
And that's very hard to get to.
Yes, yes.
You know,
how many stocks is that?
That is 5,000 stocks, maybe 5,300 stocks. You take, the positive and negative. That means that it was being bought on the offer, not the bid.
Okay, yes.
Okay, so it had to be ticking up.
Yes.
When you get lows in, you're going to see a downtick of like minus 1250, minus 1350. So that phenomenon in itself is like pretty amazing. But what I had been doing all day long also is watching the trend. Now, what the trend is that it's just a gauge of fear. And like there's more fear out here this morning at 1.98 than there was yesterday. Yesterday we were fluctuating between 1.3, 1.2, 1.3.5.
Okay.
And when you get into fear situations, that thing will pop. You can see on the 30th it was 2.8. That'll pop pretty dramatically. And we didn't have any of that. So it's like, oh man, this is interesting. And fundamentally I almost understand it the first day of the year that, if people stayed in the market, okay, they stayed in the market. It's like, okay, the market's just beginning.
Yeah.
You know what I mean? The year is just beginning.
Yeah.
Rather. But technically speaking, that doesn't get you to a low. You know, because technically speaking, what ends up happening is that you have to get so much fear that the selling has to get done, and then you only need a little bit of buying to get a good rally going again.
Sure, no, that makes sense. Totally.
So it's going to be wild watching this whole thing shake out. And if you watch any of the financial stations, and what I tend to do is that on big days like that, I'll pop through a bunch of them because I want to see. What I don't want to hear when I'm short the market is I don't want to hear that the market's going to continue to go down. What I want to hear is that, no, everything's great. And that's what the mantra was yesterday, too.
Sure.
You know. Let's go to Ken in Kansas City. Hey, Ken, Happy New Year, man.
Happy New Year to you guys. Good to talk to you.
Morning, you too, man.
What do you think about Ford Motor Company here for a buy?
Ford Motor.
Well, did you just see, Ken? Was it Ford that just put $500 million into Lyft?
GM.
GM did. Okay.
Monster.
Yeah,
monster
I knew it was one of the big car companies. Yeah.
Huge.
Yeah.
The amazing part about that. So think about it. So listen to this. This is wild. I actually took an Uber into work this morning.
Oh, did you?
I did. Okay.
That's a story. We'll find out about that later.
Exactly. Okay. So.
Okay.
So.
Yeah.
So
we'll just leave it at that. But go ahead.
I got a flat tire.
Man. Okay.
That was last night, but it wasn't flat. But it was gonna go flat. So I didn't take.
What
the
did it
car.
cost you? Like $6 something? Go ahead.
Oh, it's crazy. Yeah, it cost nothing. Okay. But so what happened is that I'm talking to the Uber driver about the $500 million, and he says to me, didn't like GM go bankrupt? I says, yeah. The first thing I thought of this morning when I was looking at that too, I says, this is pretty wild, man. That a
lot of companies go through.
No, I know that, but they get bailed out. You know what I mean? They got the bread. The shareholders lost everything.
That's close.
Well, the shareholders did lose everything. I mean, listen, I'm glad.
I don't speak in certainties, and the shareholders didn't lose everything. Just so as we put that out, everything.
Yeah. Zero.
Everything they had, they lost?
Yeah.
Okay.
Oh, yeah.
Maybe we can walk through that then. Okay.
Oh, yeah. No. When they went to, the shareholders got zero.
Okay.
Yeah.
I don't, okay. If you, okay. Okay.
Oh, yeah. No,
if you owned it, okay. You lost every cent, okay.
Right. They went to zero.
So how'd they get bailed out then if there was absolutely no equity?
They made a new company.
Okay.
Yeah. That was the bailout of 2008. And they did that because of jobs. You know what I mean? I'm glad they did it. I'm not, because there was way too many jobs that were out there, but they got bailed out. Ken, okay, so let's take a look at Ford. You got...
We're going to look those numbers up, but go ahead.
The low's 1044, the high's 1674. Okay, let's see what we got here. Well, I'd let this get into this 1340 again before I... Let me just put this on a monthly for a second. 1 second. So on a monthly... You've been in a consolidation right there. Yeah, I'd let this be for a bit, Ken. So if you're watching Tiger TV, what I put on here is that you can see May of 2010 is the bottom of the consolidation that it's in. Well, it's close to the bottom. That is $10.17. And, it hasn't, well, I guess percentage-wise it's done quite a bit. It's fluctuated between $10 and almost $18. But I wouldn't be biting just yet on it, man.
Okay.
Because it can get into that level.
You got time to take a look at Bank of America, BAC?
BAC, absolutely. So Bank of America, this little baby, all the banks yesterday came down with big volume. And, you got to be really careful here. So the swing on Bank of America was $121 million at $16.43 from December 14th. And we did $114 million. This baby looks to me like, 1463 is sticking out like a sore thumb. That's the October 2nd low, as well as the low that was established in August 24th. So what's really wild about the banks here is this. If we pull up J.P. Morgan, the banks, and so you can see J.P. Morgan came down with big volume also. It broke its swing. If we just were fundamentalists, it just makes zero sense that the banks are actually going down, because the banks should be making a lot more money. So something else is sitting out there that people are selling it. And I don't know what that is, okay? But it's sitting out there. So I wouldn't be buying those banks just yet. Now that down that swing low, that August 24th swing low, if it gets it with lighter volume, then yeah, you might have some action there.
Okay. All right, you guys have a good year.
Okay,
Thanks,
man.
Ken. You too.
Thanks for calling. Have
Bye.
a great one, man. Have a safe one. Let's go. Mike wants to look at POT, which is Potash Corporation of Saskatchewan. Yeah. So this is a nitrogen agricultural, dealer. The low is 16, the high is 37. You stay right there, folks. Tommy and I are going to be coming right back. Dow Industrials right now down 39. NASDAQ is flat. S&P's down 5.5. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over and take a look at that oil market. So oil right here, we are trading out at 36.11. He's on 185,000 contracts. The low established in this contract is 35.35. This is pretty amazing, actually, when you think about what happened in the Middle East yesterday, and oil's still sold off.
Yeah.
You know? So, and don't forget, folks, Tuesdays and Thursdays, our man, Mr. Andy Heck's a great show, the Commodity Hour. And
5 p.m. tonight, right?
5 p.m. tonight.
He'll be talking about.
I'm sure he's going to be.
Iran and Saudi Arabia.
Right.
Man.
Right. It's intense, man.
It is.
There's no doubt. You know. And it seems like, I don't mean to laugh about it because it's serious, it seems like things just keep getting worse over there.
Yeah.
But we must have so much oil that the oil market just brushes us off.
It's not. No,
right.
no.
Right. You know.
Yeah. And that kind of speaks to, though, the same where we've talked about it before, the risk reward, right? What are the odds that oil can spike down $15 right now, and what are the odds that it could spike up $15? And although it hasn't moved, I would still say the odds of a dramatic news-driven event in oil, there's much more upside potential right now with what could happen in the Middle East, in my opinion. That's just, you know.
Yeah. There's no way I'd be short oil, and you know,
right.
I mean,
right. And it's for that reason.
Anything.
It's for that reason.
It's for that
because
reason.
Tomorrow it could be at least above 40.
And I heard a great argument yesterday of going short oil, and what the argument was, and it was interesting because this guy wasn't a trader. This guy was a fundamentalist, and it was on Bloomberg early in the morning yesterday. And his argument was that he thinks that oil is continuing lower because there's so much fighting in the Middle East that it's going to have contagion around the world, and just economies are going to need less oil. Okay. You know, it's always that was.
Yeah,
you know,
lots of ways.
There is. But that even with that, there's no way, you know, that I would pull the trigger the other side.
It's tough from a risk reward from that standpoint. I think I agree with you.
Well,
right?
and this is where
to be short.
And this is where when you're setting up trades, what I'd like to do is, you know, if it croaks down there and does an ABC down, I'd like to buy the bottom of the ABC down.
Sure.
I would be more comfortable doing that. You know, I think it's right in no man's land right now.
Yeah, I'm a little uncomfortable on both sides. I am, just because, like you said, I mean, not reacting yesterday, that's where, you know.
Well, what I would be talking about is this, so watch. I'm looking at this, and this is a continuous contract, and I'm thinking, okay, if this is an ABC down, your A point is 43, your B is 33, so it's $10. Your C would be, you know, 38, so it's like, okay, 28.
I see that, but here's my take, is that it's not reacting like you thought it might have, right? I mean, if you were ever short...
That's correct.
If you were ever short this, and you heard what happened over the weekend with Saudi Arabia and Iran, you would be counting your profit, as you probably should, you know, thinking that... if you were long.
Yeah, exactly.
And that's my point. It's like, okay, so things are happening here that are not affecting the market that you would anticipate.
Right.
So just be aware of that and be wary if you're going to make a trade, because it'd be a shame if you had made that trade looking for a world event to profit. You nail the fact that there's a serious world event. Can't get much more serious. Yeah, and nothing happens. So that's what I look at, and I say, hold on a second. I could be right on anticipating the fundamental aspect of things in the world's climate that we're dealing in.
Right.
And I don't even profit off being right off something like that, which is quite a call, you know.
And you know, Andy Heck tells the story about the first Iraq War.
Yeah.
And I heard Larry tell the story too. That, you know, everyone thought oil was going to go to the moon, and that was the high of oil, and it crashed.
Yeah, crazy.
That's about as intense as you get. It's like, oh my God, how does that work? You know?
Now, the other side of that, he tells the story sitting with Andy Hall, though, where he made like $400 million in a couple hours when they went into Iraq, right?
Right.
Yeah.
Right. So, that was the same thing, because what had happened is that, that was the same trade, which is, it just... And
was that the same trade?
Yeah, it had to do with Andy Hall wasn't betting on the oil price right now. He had a spread on. That's what was going on, and then he was talking.
I think I recall oil spiking up though for that profit, and you're talking about oil reaching highs and then falling in another one.
Well, maybe it's two different trades, but
maybe it is. I just see you tell. Well, I remember that we went into Iraq and it opened the next day. I've heard Andy tell it multiple times. You know, we went in.
That was the high in oil.
I don't know if that's the story, but.
Because then there was a second. There was a second trade.
I think we got to get these exact dates up if we're going to go into that. We got to. You're speaking too general. This frustrates me when we need these exact dates because you're not sure yourself right now. So let's get sure.
Okay.
If we have to find the date, it's an easy date to find if it's the high, right?
We'll ask Andy this afternoon.
Okay, fantastic.
That'd be an easy way.
Yeah.
No doubt.
Yeah, we'll see what happens. Come on, man. Maybe it's one trade. Maybe it's two. Maybe it's one trade.
No, I'm talking about two different issues because Andy was telling us about a second trade that the guy had the. Excuse me, folks. Andy Hall had the further out oil.
And Dave White saying calendar spreads. Maybe that's what he was doing.
The guy that had the oil for the month of delivery thought he was going to make a fortune, just like you said, and he actually lost money.
Okay.
And that's he was calling up saying, how much am I making? And the bottom line, he had lost money because the front month went down, you know. So if we go take a look at some of the higher volume stocks out here.
You might have that reversed with the front month going, but either way.
Long front month. Shot out. Yeah, no, that's what he was long. The front month is what went down. So Smith,
I'm not going to go with that one until I see it. But okay, so you speak in certainties that sometimes aren't certain.
Smith & Wesson has some juice into it today. That's up 2.7. It's almost 10%. Netflix. Let's go. Let's see what's going on with Smith & Wesson. Look at that. Oh my God, that's a big ABC up.
Well, you know what's going on there, right?
What's going on?
Obama's going to come out with some executive actions on guns, and so I think they've had sales that have been skyrocketing leading up to it, and there's all these stories about just...
Yep, let's see.
Earnings per share above estimates. Yep. I mean, there's been huge spikes for the first time. I think the biggest month was in December for gun purchases since about 2 years ago, which correlated to another event where everybody just goes out and stocks up. Yeah.
So you get an ABC up. So A point is $18. The B's $24, $6. The C's $21.
Pretty much there, right?
Yeah,
close. We got another point, maybe.
Yeah, they hit it's $27
at the top.
We put this on a monthly. Oh, look at that. All the way back to the highs. And it's going to take those highs out with volume. That's a trip, man. So we got this back to 2007, $22.80. On a monthly, you had 17 million shares. Look at that, 61 million shares. Oh, my God. That's pretty intense because when you take a look at this, folks, if you're in your car, what we're looking at a 10-year chart. The high that was established in 2007 was $22.80. You took it out with volume, and when you look at a price projection, you just take the top of that, which is 22. You take the low of that, which is $1.50, and it's like, oh my God! Another 10 years, that thing can be at $44, which is just pretty amazing, actually. Let me just see. Yeah, selling a lot of guns. Did you see? And we gotta ask Daryl about this. So in Texas, they have the open carry.
Yeah.
They had a picture of a guy with a big rifle over there.
It's intense, man.
Hey, giddy up. Giddy up.
Yeah, that's how we're going to end that one. Giddy up.
All right. My God, it's intense.
I don't think we should end that with giddy up for open carry, but not a fan, but hey.
Stay right there, folks. Tommy and I are coming right back. Dow is down 5, Nasdaq's up 11, S&Ps are down $1.50. We're going to be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi,
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. You hit the Dow up 8 right now. Nasdaq's up 15. S&P's flat. You get a nice little bounce in this market. Let's go take a look at see what we're looking at here. And, of course, don't forget, folks, we got a great lineup coming up. We got our man, Mr. Basil Chapman, coming up next. TD Ameritrade, Thinkorswim with Swim Lessons. Our man, Mr. Steve Rhodes, Dave White, myself, Andy Heck will be back with us. And so... And, of course, if you hadn't heard it, folks, this morning we had Nico and Paige keeping you healthy. Great way to kick off the morning.
It is, man. It's awesome. You know, it's of course, on our archive hit page, but you can go find our Facebook page as well, and that's shared up there as well. So.
Well, that's great. So the way the Facebook page, let's talk about that for a second. So they can come over, it's TFNN, and they can like our Facebook page, right? Because that helps us, right?
It's TFNN.com, I believe, is what our Facebook page is called.
Okay,
yeah.
Right.
Okay.
And we put the videos up on that.
We do, yes.
Right.
Yep.
So the counter trend bounce right now in these S&Ps, folks. Okay, so watch what we have here. Intraday, the high, you had a high that was established at 9:40 this morning, 9:30 at 2013, and it looks like it's probably going to go up and probably try to test that baby. Now it's going to need a lot more juice to get up and over that. If we take a look at the NQs, the NASDAQ NDX 100, the NDX 100 also looks to be about set up the same. Now, the NDX 100 is weaker than the S&Ps out here this morning. The small caps continue to basically be the weakest. Well, see, this is intriguing, too, is that the small caps, folks, actually broke the swing point. Let's see, with volume, 53 million. Yeah, so the small caps did it. The small caps broke that level with volume versus the NDX 100, the S&Ps, the composite itself had that lighter volume. So we take a look at the XLE. And folks, if you haven't heard John Logan's show, amazing show, and he had been talking about that, I think it's the XLY for quite a bit, meaning that was the one that was showing up. Yeah, that was showing up on a scanner. And that's when it fell out of bed yesterday in a huge way. And that had to do with Amazon, folks. Amazon is the largest weighting inside of that. But what happened, Amazon was staying up at those highs, and then Amazon yesterday,
it's quite a tumble.
Exactly. It closed on December 31st at 675, and then it opened at 656 and went down to 627. Right now it's 636. So there's no. Yeah, the first time I got something on Amazon that I haven't got, I ordered 2 covers for outdoor heaters.
Okay.
And I got one in the box. And so what happened is that it's really so cool, though. You can file a claim, like, really easy. So we'll find out what happens.
I'm sure they'll take care of it.
It's the first time that ever happened to me, though. But what I was really psyched about is that how easy it is to file. You just, you go into the thing.
Yeah.
I hit one button. I just says, listen, I got 2. And they said, okay, you'll be back to you within 14 days.
Yeah, the customer experience is great. It is.
And they also say in there, if it's not straightened out in 14 days, within 90 days, I believe that I'm going to get what I want, period.
And I bet it'll be quicker than 14.
Right.
For sure.
Right.
I do.
But that was pretty wild, is that, you open a box and there's only 1 versus 2.
Sure.
Like, okay, so.
Yep.
We'll see how that whole thing shakes out.
Yep.
You can expect, this market is flat right now. You can expect, basically building some cars, up, down. Great trading opportunities, no doubt.
That's for sure.
You stay right there, folks. I'm Mr. Basil Chapman's coming up next. And then, of course, TD Ameritrade, Thinkorswim, Steve Rhodes, Dave White, myself, and Andy. Thanks, pal.
Thanks, man.
Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.